Oh, okay. All right. So good afternoon. I am so glad you are here with me, Jordan. Like I said at the very before we hit recording, I have much love for this man and his family because he did a solid for me and my family. And it was outside of really our sphere, like where we're physically located. So we literally had to reach out to our extension offices, our partners and stuff, and make stuff happen. And I was under a very tight deadline.
Yeah,
It's heavy and thick when I can't physically make stuff happen, you know.
yeah.
But let me just start out giving a shout out to Cherise Clark of Clark Premier Realty Group. She was my broker at the time. She connected me to this dynamite man right here, and we made it happen. So I
Sure did.
always have love for the Clark family. That's my family extended, and for the Alston family, and for now Bayshore. And he's going to tell me exactly what all they can do. We're kicking off 2026, in a great way, having a Q&A to really give the information and education to those who are in the market, who's aspiring to be in the market, those who are looking to move up in the market. We are in the DMV area. However, Mr. Alston is going to tell more about like where can he reach? What states does he touch? So no further delay. Jordan Austin, thank you for being here with me. I really appreciate you, man.
No, well, thanks for
Look,
having me.
I'm
I
gonna get
really
on your
appreciate
nerves
you. Look,
with
look,
the
no, this
gratitude I express probably every time we see each other
yeah,
because you have no idea. You know what I'm
yeah.
saying? Maybe you do, but it's forever love, you know?
Hey, that's what our calling is, to help people
Yes.
and be an asset, and that's what I try to be. But yeah, for everybody who don't know, my name is Jordan Alston. I'm a branch manager here at Bayshore Mortgage. And so Bayshore has been around for over 20 years. It's made it
Nice.
through all the crises within the mortgage industry, and we're
Yeah.
still standing. And
Yeah.
have a myriad of products that we'll kind of dive into here,
Yes.
that can help not just first-time home buyers, but everybody, repeat buyers, investors, and so on. So as a branch manager, my goal is to help as many people as I can, obviously, starting within my branch and my
Mhm.
loan officers, but also my clients,
Yeah.
who are trusting us to get the job done, deliver a certain level of customer service, which
Hmm.
we always aim and strive to achieve, but also
Hmm.
have good loan products and that they can put trust in that they're going to be winning in the market. So, I'm looking forward to the conversation.
Yes, well, I'm so glad you were able to be here and make this happen. Okay, so tell me, Bayshore Mortgage, you've been around for 20 years. Are you only focused in DC, Maryland, Virginia, and Michigan? Tell me what all you do? Are you a direct lender, indirect lender? Does that really matter, for buyer?
For
Yeah.
sure. For sure. Yeah. So at Bayshore as a whole, we're nationwide.
Oh,
So
nice.
we operate everywhere. Now,
Okay.
myself, I specialize in DC, Maryland, Virginia, and
Okay.
Michigan. However, I have teammates over here and loan officers over here who can operate nationwide.
Okay.
So if you have anybody anywhere, just send them over and we'll be able
Nice.
to take care of them. We
Okay.
are a direct lender, so
Okay.
we do underwrite the loan in-house. We approve it ourselves and we fund the
Hmm.
loan in-house.
Hmm.
And so we do everything in-house for FHA, conventional
Hmm.
VA, USDA loans. However, we do have broker options. So if somebody needs to do a non-qualified mortgage, which is like a DSCR loan, bank
Hmm.
statement loan, ITIN, 1099, then we can broker those out to some other investment partners.
Okay. Great. 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 Okay. So does it matter, like with the non-qualified versus the qualified, like does the time frame change with those two different
Yeah,
umbrellas of loan?
potentially. So and you know how it is. Like when something's in your hands, you
Hmm.
can tell a person exactly how you're going to do it, when you're going to
Yes.
do it, and when they can expect to have this
Yes.
product. And so for all the loans we do in the house, I can kind of put my stamp on it. Okay, we're going to take care of you in XYZ amount of days. If we need to close quick, we can close in a week if we need to, right?
Yeah. Oh, okay.
Now if we're looking at a non-QM product in which now we have to go through a broker partner, that
Mm-hmm.
definitely changes things because it's just
Okay.
more channels that we have to navigate, right? So it has to
Mm-hmm.
come to us, then we have to send it to them, and we have to get with our underwriters, their underwriters. And
Yeah.
it's a whole thing, it's a whole production. But I mean, nonetheless, we still closed those fairly quickly. I was just talking to a client and he had went and before he had came to me, I don't know why he came to me first, but he's been in the industry for years, so he has a ton of different
Okay.
partners. So no hard feelings. But he talked to one guy. He told him he can do all these things with a DSCR loan, and they started this process back in like November. They're still going trying to get it closed. So
Oh my
yeah,
gosh.
this was supposed to be done a long time ago. But sometimes that's the nature of
Mm-hmm.
certain broker partners. That's why it's
Mm-hmm.
important to kind of have a few that's your go-to, so that
Relationship.
way you can kind
Yeah.
of fill them out, know what they're about, know their processes,
Yes.
so that way you can expedite the process and push your
Right.
client through and make sure that they're closing in a timely manner.
Right.
But it's always a little bit different when you're dealing with a third party.
Yeah.
Sometimes even on the direct lending side, if we have like a down payment assistance program that we have to
Mm-hmm.
send to a third party, now it's kind of out of our control. So all we can
Mm-hmm.
do is um, do our best to do our due diligence and make sure all our
Mm-hmm.
processes are in line with that third party's processes. We're doing everything
Mm-hmm.
they ask of us, and they're doing what we ask of them to make sure we get the loan closed in a timely manner.
Right.
But when you bring other people into the mix, it can slow things down.
For sure, for sure. Listen, okay, so here I gotta toot a little horn or whatever and say, look, I have firsthand knowledge about what Jordan just said because when you can't have your hands on it and you're relying on other people and like just hearing the case you're talking about November, I was like, oh, they hit holiday season. Oh, folks is on
Yep.
holiday and they
Yep.
on some people are on holiday until the end of January. You
Yep.
know what I mean? So we may have to follow up and see how your client or customer was doing and did they close yet? You know what I
Yep.
mean?
Yep.
Like because I completely understand it's important to know who you're dealing with because sometimes when folks get on, their holiday mode, it's a wrap, and
Yep.
that could cost a whole transaction. People could lose a lot of money. Some people could lose a home,
Hmm.
so it's that's near and dear for me, you
Yep.
know. All right, so let's jump in talking about 2026 and the market because
Hmm.
major news media they will talk about the real estate market as a overall, but that does not necessarily reflect what's happening here on the ground in which we're on and where we're located. So from the lender's perspective, what do you say, what do you see going on with the market?
Yeah, I think it's definitely a buyer's market. Not to say that things can't shift because they definitely can in a
Mm-hmm.
drop of a dime, depending on, some different things that happen, within the news or whatever, with the feds, rate cuts,
Mm-hmm.
whatever. It could be a multitude of things that can kind of shift the market. But right now, it's still a buyer's market. I'm
Mm-hmm.
seeing homes sitting for a while.
Mm-hmm.
I think we have, I think I saw a stat somewhere where there's like the most amount of homes on the market that they've been since like 2019 or something like that.
Yeah.
So it's a good amount of homes on the market, which means there's a lot of opportunity for buyers.
Right.
And also it means that, there's a little bit of not necessarily panic, but there's a lot of people who want to get their home sold that it's like,
Sure.
okay, it's been 2 months now, three
Right.
months
Right.
now. When is this going to happen? Which means they're
Yeah.
probably more
Mm-hmm.
incentivized to make some changes in terms of
Mm-hmm.
maybe they might adjust the list price.
Mm-hmm.
Maybe
Mm-hmm.
they may
Some
offer a little bit of
concessions.
seller help. You
Mm-hmm.
know what I mean? So
Mm-hmm.
buyers, while there is a lot of opportunity in homes on the market that might drive more competition now.
Right.
So people are out here seeing, okay, well, I can get that house for that price right now, or oh, I can
Mm-hmm.
go and get this amount of seller help. Oh,
Mm-hmm.
well, now it might be a situation in which there's more buyers in the market and things can start to shift a little bit. So
Mm-hmm.
if now it becomes a market of a bunch of buyers, it kind of shifts in favor of the sellers. So and
Mm-hmm.
that's how things can shift in a dime. So, but I would say right now. I'll have a lot of my buyers, getting a good amount of seller help. So it's
Okay.
definitely a good time to be a buyer.
Okay, all right. And so let me ask you this. Are you seeing the loans taking longer to close, or is that, unchanged? Um, yeah. And then
Yeah.
also, let me just ask the realtor question. How
hmm
quickly do you typically close a loan?
Yeah, I mean, if it's no rush, then I'll typically close in 30 days, right?
Okay.
But if we need to rush a file through, I've closed a loan as little as a week.
Nice.
So it really just depends on the need of the borrower.
Okay.
And also, if it's a situation in which we know that we need to close sooner and this is going to be a priority for it, we can have
Hmm.
the loan fully underwritten up front. So that way
Yeah.
you're going out shopping with a loan commitment letter as opposed to
Nice.
a pre-approval. So you don't have to go through underwriting once you go under contract. We're already
Right.
through underwriting. We just need to get the title work in and maybe a few conditions dependent upon the home that you choose.
Hmm.
And we're getting you to the closing table. So we can close pretty quickly.
Okay.
And so the first part of the question was, I believe, how what was it again?
Are you seeing the loans take longer to close?
Okay, gotcha.
I
So
know
yeah.
we're seeing inventories, there's more inventory in the market, and
hmm
homes are sitting on the market
hmm
longer, but are you seeing similar, changes with loan closings, or is that unchanged?
Yeah, so that hasn't changed. Yeah, so we're still closing loans in the same amount of time, no matter how long the home's been on the market. You might run into certain situations in which a loan may be delayed, like if it's a situation in which a person just flipped the home and they, maybe we pulled the SDAT records or whatever and we didn't see it when it was changed, or maybe we did and we notified the seller, like, hey, you just flipped this property. We're using
Mm-hmm.
FHA, 90-day flip rule, so
Mm-hmm.
see you in a couple months. It might be a
Right.
situation like that. But for the most part, if it's nothing going on with the home, we're closing loans in the same amount of time. If the
Okay.
appraisal comes back and something's wonky on it, then we'll usually get that out immediately so that
Mm-hmm.
we can make sure we're hitting our contracted closing date. So we're really not seeing much delays right now. We really try to
Okay.
hit all of our dates, but if something were to happen that's more so out of our control is when you start to see delays. But we
Mm-hmm.
try our best to kind of circumvent that.
Okay. And let me just make this one disclaimer so that you don't catch any heat from someone seeing this, video, that for first time home buyers, if you are in a program, right? If you're doing a first time home buyer program, yes, Jordan can close typically, within his products 30 days to as short as a week. However, those programs that are funded by the state, or have some, guidelines and requirements by the state, they require their own, dictate their own time frame. So be prepared to close within 35, 45, or more days. Okay. So in theory, a conventional FHA, other products, that Jordan can articulate, those are those windows in which he stated, that's the time frame for that. But if it's a product that is funded, you're receiving some kind of funds by another third party, they're going to dictate their own timeline. So I don't want
Yeah,
anyone to
that's
have
a
the
good
wrong
distinction.
expectation, or kind of mix and mingle information from various product and sources, and then they're just in a jam. So
That's a very good distinction to be made. Like for example, if somebody's buying in Prince George's County and wants to utilize the pathway to purchase program, they need at least 60 days, right?
yes,
If we're doing MMP, 30 days.
yes, yes,
If you're looking in DC doing HPAP or EAP, that's probably a 45 to 60-day closing, and so
right.
it really does depend on the particular product. But if there's a need to close sooner, then of course we're always going to game plan for that.
Nice, nice. Okay, so does BSM, I'm saying BSM, but does Bayshore Mortgage Funding, do you all specialize in any specific products, or, um, like, hey, our largest cadre of customers are investors or first-time home buyers or move-ups? Like, do you have a specialty?
I would say we're kind of the one-stop shop. We can do it all. So I have my fair share of first-time home buyers, just
Mhm.
because Typically agents will send clients to me that need a lot of assistance. And it's because it's their first time. They don't really have the, money from mom, dad, grandpa, whoever to, give them 20, 30, 40, 50,000, you
Hmm.
know what I mean? So a lot of times I am dealing with first time home buyers.
Hmm.
I do have my fair share of investors as well. I just think naturally it's more people buying their first home than an investment property. So naturally I deal with a little bit less investors. But yeah, everything in between. So your move up buyer, your first time home buyer, your
Hmm.
investment, and we have products for them all. So whether they're buying a home for the first time, we can do MMP, we can do a host of different things. If they're a move up buyer, I actually have a program for that, using FHA financing, investment, investors, we have DSCR, we have, different products that they may be able to utilize. And there's also different ways that you can get into investing. So, I mean, you could buy a primary residence, live there a couple of years, and, eventually you want to buy another property and rent that one out. Well, now you're an investor, as opposed to just going out and buying an investment property that you don't plan on living in ever. So, yeah, we have a multitude of different things we can do.
Okay. All right. Look, I want to get more information about that.
Yeah.
Like especially, yeah. Listen, my first time home buyers, y'all need the information. We definitely we're gonna have to do this again, Jory, and we will talk and we will just focus the conversation on just first time home buyers. But I'm gonna be a little selfish in kicking off this year, especially with my own motivations.
Uh-huh.
Okay, and talk about move up, the move up crowd,
Yep.
the families, that want to move up. They got a little something to start and it's been a humble abode for, a set amount of time, but
Yep.
see and know exactly what they want to expand into. So, in a few seconds, let's explore that. But you mentioned and we'll talk about like how to prepare, but you mentioned DSCR. So can
Mhm.
you tell me what does that acronym stand for and what is that product?
For sure. So that stands for debt service coverage ratio.
Mm-hmm.
And it's a product for investors to use to buy turnkey investment properties. And that's an important distinction to make because a lot
Mm-hmm.
of investors are looking to do fix and flips, not
Mm-hmm.
going to work for DSCR. So it has to be turnkey. And the way that
Ready
we
to
get
go.
you qualified is we use the either existing rental income or projected rental income of that property to qualify you to make that purchase. So instead of going the traditional route of using your own income,
Mm-hmm.
we use the amount of that rent. So if you're buying a home and the mortgage payment is $3,000, can the rent cover that? If
Mm-hmm.
so, you can utilize the DSCR loan as long as you have a high enough FICO score and as long as you have the means to put down, which is usually between at least 15 to 20% down for
Okay.
a DSCR loan. The
Okay.
higher your credit score, the lower you'll be able to put down. But
Okay.
generally you're going to be around that 15 to 20% mark.
Okay. Do you have like a bottom line, minimum credit score for that product?
So that's one of those non QM products I was talking about. So we
Mm-hmm.
have various different partners that
Mm-hmm.
we can broker DSCR loans to, and they all vary and they all change frequently. So, but I
Got you.
would say if you're at least above between 640 to 660, you
Mm-hmm.
have a chance. I qualify for DSCR, but you want the score to be as high as possible.
Okay. All right. And so non-QM is non-qualified mortgage. All
Yes.
right. So for
Yep.
folks that are, not aware of the real estate terms, I'm going to pick them out of Jordan's conversation and have to define them for you. Okay. And so you mentioned some state of Maryland home buying programs. You mentioned counties where, Prince George's County, they have the pathway to purchase.
Hmm.
So are you one of those designated lenders for those programs? Do you deal with those a lot? Tell us more about those programs. And then also Virginia. Does Virginia have any programs for first-time home buyers?
Yes, yes. So I am a partner with Pathway to Purchase. I'm a partner
Mm-hmm.
with MMP. And yes,
Mm-hmm.
Virginia does have the Virginia Housing Program out there. And so with Pathway to Purchase right now, they're offering up to $50,000. Of course, it does depend on your household income, They don't have any credit score requirements, but you have to have a high enough score to be approved either through FHA or conventional. And so you have to meet they have kind of strict debt to income ratio and housing ratio requirements as well, that you'll have to meet. But, and so that's why I tell everybody to just apply, let me take a look, and
Mm-hmm.
I'll be able to direct you on which program makes the most sense for you.
Mm-hmm.
Because it depends on not just how much they make, but if they're married, if they have children that are going to be living with them, are they employed? How much do they make? This is based off of a household. Same with MNP, based off of household income, and that's statewide.
Mm-hmm.
And each county has its own income limits, and it's based off of the household income. So we have to take a look at that. They have their own DTI requirements and things of that nature as well. Virginia housing, similar situation. They have income limits that we have to meet, DTI limits that we have to meet. They do have a program that will cover 3% of the purchase price.
Mm-hmm.
And so, whatever makes the most sense for clients is the direction I'll point them in.
Okay.
But whatever makes the most sense that they're eligible for as
Yeah.
well. I have a lot of people come to me and they want to do a USDA loan, make too much money. A lot of people don't know USDA loans have income limits, right? Based
Yeah.
off of the household size and also the area that you're looking to purchase in. And so there is a lot of opportunity, but there's
Mm-hmm.
also overlays and guidelines and things that most people don't understand. They hear the name of a product, they're like, I want to go that route. And then when I
Yes.
look into it, it's like, fortunately, you may not qualify, but we
Yeah.
always have something in most cases that we can do for folks.
Okay.
We also have a good program that is nationwide, or almost nationwide. There's maybe a few one-off states that can't do it in, but it's called the Hoper program, and it's a solar program, and so clients can get up to $13,000 to go towards their down payment or closing costs, or even if they don't need the money for closing, they can put that money in a savings account after closing. Yeah, crazy, right? So it's actually considered earned income. And so it's not a secondary loan, it's not a secondary lien. It is going to be their money. And so you have to have solar panels installed on the home within 120 days of closing. Okay, so you get the reduction in the electricity bill on a monthly basis, which obviously is usually a couple $100 per month. And then
Yeah.
in most cases, depending on where you're purchasing, clients will get an annual tax credit of $10,000 to $12,000 annually for a tax credit as well, in addition to them covering up to $13,000. And so it is based off of 3.5% of the purchase price. So let's say it's a $300,000 home
Mm-hmm.
and down payment 3.5%. In that case, the person only get 10,005,
Okay.
right? 10,500. But as you increase the purchase price, they'll go all the way up to 13,000, which will be the cutoff.
Okay.
But that program has helped a lot of people because it doesn't have any income limits like we've just been talking about. All you have to do is be approved to go FHA. So no minimum credit score. You just again FHA's minimum is 580, so I guess you need at least 580. But the
Mm-hmm.
program doesn't have any overlay in terms of credit score, no overlays in terms of household income, no overlays in terms of DTI. You just have to get an FHA approval, and obviously not own any. And to get an FHA approval, you can't have any other FHA loans out at the time, but you can actually own another home. So don't even have to be a first-time home buyer. So this program has helped a lot of people.
So that's the Hoper program.
It is, yep.
And that's a program. Wait. So that's a loan
Nope.
or
Earned
okay,
income. It will be considered
earns
earned income.
income. All right,
And
so
so the cost of the solar panels will be included into the FHA loan. So most people shy away from solar because they don't want to deal with those UCC liens, right? They don't want to get
right,
secondary liens on the property when they go to
right,
sell. You're going to
right.
own the solar outright through your FHA loan. So no
Oh,
secondary liens. It is not a secondary loan. It is going to be your money to do with whatever you want to do with. Most people apply it to their down payment or closing costs. But let's
mm-hmm,
say somebody already has that money, they have it covered. They already know they have the money to close on this home.
mm-hmm.
Well, just go ahead and add that to your savings account after you close. So,
Okay, okay.
yeah.
All right, cool. Now let me ask, because you just said something that made me think about the terms. What terms do you offer for your loans? You know,
Yep, so we have everything that's traditional, the 30-year, 25, 20, 15, 10. We even have, again, it's going to be non-QM, but we have a 40-year loan that we can do with a partner as well. So we have a multitude of different options.
okay, okay, all right. This is good. The Hoper program. Okay, for solar. All right. All right, so let's talk about the move up, folks.
Yep.
Okay. So what do we need to know? How do we prepare um in order to move up? What are the credit score requirements or debt like what it, for those who want to build wealth, right? And we've heard, that building generational wealth happens through real estate. That's historically been the case for most of the wealthiest families in America, right?
hmm
So if we don't want to sell the property in which we're in, we want to hold on to that. What do we need to do in order to have a lender, clear us to close to purchase something else? What do we need to know?
Yeah, for sure. And it can happen in a multitude of ways. And I've been a recipient of,
Okay.
the move up. So
Congratulations. Yep.
yeah, no, for sure. So I bought my first home, went conventional, put 3% down. Bought my second home, also put 3% down. I bought my second home with my wife, and
Hmm.
because she was not a first time, I mean, she was a first time home buyer, we used her first time home buyer benefit to put 3% down again. And so, yes, that can happen. Most people didn't know that you can do that. They're like, oh, well, you have to, only have the first time home buyer on the loan and not the repeat buyer. Not always the case. So reach out to me. We'll figure out if we can make it happen. So we bought two homes with a total of 6% down. And then now we're under contract now for our third home. And this one we're going conventional. We're putting 5% down. So we're going to
Okay.
have a total of three homes with 11% down. And most people think that you need 20% down for one home. So
Sir, you wait, hold on, because you are saying something. I'm like, wait a minute. Okay.
yep,
You said conventional. All right,
yep,
5%. Like,
yep,
wait a minute, bruh. I need you to clarify
yep,
the conventional percentages, down payment. Like, how do you get that? Because
yep.
conventional back in the day used to mean you brought 10 or 20%, 25% in some cases. So you talk about single digits.
Yep, for sure. And that's like kind of the biggest myth right now is that you need 20% to close on a home. Not the case. So the minimum down payment for a conventional loan is 3% of your first time home buyer. Okay.
Okay.
If you're a repeat buyer, it's going to be 5% down going conventional. Now, if you're going FHA, it's always 3.5%, but you can only have, in most cases, one FHA loan out at a time. All
Okay.
right. So all my veterans, VA loans, you guys know in most cases 0% down, USDA in most cases 0% down. But if we're going conventional, it's either going to be 3% minimum, 5% for repeat, or 15% if you're buying an investment property. Obviously, with conventional, you can buy a primary, secondary investment, going FHA, VA, USDA has to be primary. Okay. Now if you are a repeat buyer on a loan application with a first-time home buyer, if you meet certain income limits, you can qualify for maybe like a home ready or home possible and different things that may allow you to put down 3%. And so that's an option for some people.
Hmm.
And then once you have both, talking about two different, like let's give an example of a family, purchasing a home. If neither one of you have any first-time home buyer benefits any longer, you guys both own a home, then of course you'll be putting down 5% as a repeat buyer, unless you want to go the FHA route, you decide to, for whatever reason, leave the homes that you're currently in, you want to buy another home and use FHA, you can
Hmm.
put down 3.5%. Now, here's the thing if you want to use a lease agreement to essentially cancel out the mortgage payment, you can't go FHA because if you go FHA, they're going to hit you for that mortgage that you're leaving if you're trying to rent
Hmm.
that property out. Now,
Hmm.
if you're going conventional, you'll be able to use a lease agreement for your departing residence that will essentially cancel out that mortgage payment. And so you can use 75% of the lease agreement. Okay. And so let's say, for example, we have a customer, a client, and they're going to be getting $2,000 per month
Mm-hmm.
for their property.
Mm-hmm.
We can use 1,500 of that to put towards their existing mortgage. So if the mortgage is only 1,500, great, your entire mortgage is canceled out. And now you can move forward with this new purchase without having to worry about how you're going to, have your DTI in a qualifiable range because you have this big $1,500 mortgage hanging over your head. Now you can just focus your attention on your current debts plus, your new projected mortgage payment. And so you can do that. Once let's say you rent that home out and it's been to a year or two, now you can use tax returns to show how much you've made from that property. And let's say, after 2 years, now you want to buy another home. Well, you use a lease agreement for your most recent home. Okay. You use the tax return for the first home. And now you have both of those mortgage payments canceled out. You might be earning a significant more amount of money from the first home that you can actually help to use that is qualifiable income. And so there's a myriad of different ways that it can happen.
Mm-hmm.
But the main thing is just making sure you're talking to a lender that can help you walk through the process because the average person is not going to have all this in their head and on the ready and know what to do.
Right,
But
right.
essentially, yes, if you're going conventional, you can use a lease agreement to help cancel out a mortgage payment to help you qualify for the next property. And it's not to say that you can't go FHA, maybe even VA, if you're a veteran or USDA to purchase another home. But the guidelines in terms of canceling out your mortgage payment that you're leaving are just different.
Mm-hmm.
You won't be able to do it in most cases. So in most cases, you have to be going conventional for your new purchase to use that lease agreement for your departing
Okay, so 5% down. That's the focus. Just
for a repeat
focus
buyer.
on
Yeah, uh-huh.
5% if you're a repeat buyer and you don't want to let your existing property go. And and the lender has to look at your debt to income ratios. And so you if you rent out your first property, 75% of that lease agreement will count towards offsetting that mortgage on that
Exactly.
property. So
Exactly.
you will be responsible and look they'll have to look at 25% of that mortgage payment
Not
coming.
necessarily. So let's say
Oh,
your mortgage payment is only 1,500, right?
mm-hmm.
But you got a lease agreement for 2,000.
Right.
75% of 2,000, 1,500. So your mortgage payment's taken care of.
Gotcha. Okay. Okay. Look, get me together here. Get me together. Listen, Agent Shell is trying to move up in
Yeah, yeah,
2026.
yeah.
Okay. I'm not doing this just for others. I am really trying to do this for myself. I'm gonna lead
Hmm.
by example.
Yeah,
Okay, so that is awesome to know. And then what about so do we need to focus on debt to income ratios beforehand, or we should just apply and then have that conversation, know what we're looking at and dealing with?
yeah.
What's the best approach?
I would say just apply because
How does
that's
that affect my credit?
yeah,
That's a
right,
hard pull.
exactly.
You know.
We have the ability to do soft pulls so that it won't
Okay.
affect your credit.
Okay.
And so just like they say in church, come as you are. Let's figure it
Right.
out. Because it can be a situation in which you're procrastinating or thinking about it too much, or now
Right.
you're trying to, calculate things and you don't really know how to do it. That's what you have
Right.
professionals for, right?
Yes.
So come to the professional, let me figure it out for you. Let me help you through it so that way we can save everybody time. Save your
Right.
time. You got stuff to do, right? Don't be
Exactly.
trying to take up your
Exactly.
time away from your job and family and everything else, trying to do my job. Just come
Right.
here. All right, let's talk about it, and we can figure out what we need to do to game plan, which is what
Right.
the mass majority of my clients do. Not very many people come to me right away, just
Mm-hmm.
ready to go, right? So
Mm-hmm. Mm-hmm.
usually it's always a situation in which we're having to discuss something that we need to do differently
Mm-hmm.
in order to get them where they want to be.
Okay.
If you come to me ready to go, great, amen. Let's
Yeah,
move
let's get
forward.
it. Right.
But that's not the reality for most people.
Mm-hmm.
And so don't be discouraged. Just come
Mm-hmm.
on, let's have a conversation about it and
Mm-hmm.
figure out a game plan to move forward.
Okay. All right. Let me just make this quick point real quick because it just dawned on me. We used to be entitled to a free credit report every year. that
Hmm.
has changed. So now you can pull your credit report and look at it and see what it says and see how many inquiries and what areas you need to clean up or strengthen. You can do that more frequently than once a year. You can get your credit report more than just one time a year, and that would be beneficial, in the preparation and the process and talking and engaging with Jordan and his team, to look at it now. And then, like, okay, I want to start looking and seeing what the market is doing. See what your information says, and then, put a game plan together and strategy. Like, here's what you need to do, here's what needs to be cleaned up, knocked off, paid down, and then listen, 30 days, 90 days, 180 days, before you know it, we're going to be in spring, we'll be in May, and that is, the move around season, you know what I
Yep.
mean, buying season. So this is prime time to get ready, or to just get your navigation in order, so that you know that you will hit that destination and have that achieved outcome when you want it, when you're ready. I don't care how dismal, how dim it looks right now. It's like, take action, take those baby steps where you can, have those hard conversations, because guess what, the biggest thing is to know that it is temporary. The conversation, whatever your situation is right now, is temporary. The debt you might have piled up, guess what, it's temporary. So you need to talk to people that have the information and the know-how to get you to that next stage and destination in life. Have those conversations now. You're not gonna like it, because I didn't like it. You never feel so broke until you talk to a lender. Once they pull your credit, oh, that tells you exactly where your financial reality is.
Yeah. Yeah.
So I definitely encourage you. I'm not just saying this because, oh, this is my business, this is my profession. I'm taking these lessons and implementing them myself,
Yeah.
Okay, so are there any other things that we need to do in order to prepare, and before we start to walking through and, wanting to make offers, what else do we need to know?
Yeah, I mean, we kind of hit the nail on the head with just
Mhm.
reaching out and applying. We'll connect with your realtor, then
Mhm.
connect with your lender, get
Mhm.
that pre-approval done. Once you apply, I'll take a look at your income, your credit, your assets, figure out where you're at and where
Mhm.
you need to be. If you're good to go, then great, we can get the pre-approval sent out. If you need
Mhm.
some work in some certain areas, whether it be your income, credit, or assets, then we can talk about those things and then get you a game plan to be able to move forward.
Mhm.
But yeah, like I said, man, it's just a matter of taking that leap of faith. It's like when you go to the doctors, right? You look,
Mhm.
it's gonna be on the table. Whatever you got going on, you gotta
Right.
talk to them about it, or else it ain't gonna get better,
Exactly.
right? How you gonna get better
Mhm.
unless you had a hard conversation, right? So hey,
Mhm.
doc, this is what's going on. It
Mhm.
might be get out of your own head about it. Hey,
Right.
lender Jordan, this is what's going on. Okay, let's take a look and figure out a way forward. I'll write
Mhm.
you a prescription, right?
Right. Right.
And
Exactly.
figure
That
out a way
roadmap.
to move forward.
Yeah.
But you have to have the conversation. Don't try to do it on your own. If you try to do it on your own, you're going to be all day, all year,
Mhm.
and it's just going to, you're getting in your own way and delaying
Yeah.
your own blessings, right? So
Yeah.
just come have a conversation and we'll figure it out.
All right. So let me ask you one other question. That's we talk like it's nothing, right? But you mentioned during this conversation a commitment letter versus a pre-approval. Can
Yeah,
you just let's back up and talk about the differences? Because some folks will have a misconception as to what's what and what's real,
for sure.
like, tell me what is it that says, hey, you really are, you're rock solid and you're good to go, you're clear to close, because that's
Yeah.
what matters. Don't nothing else matter until you get that clear to close.
For sure, for sure. And so us in the industry, we know it. So to kind of break it down to the
Mm-hmm.
average consumer, a pre-approval is when you reach out and do what I just said.
Mm-hmm.
It might be a soft pull, it might be a hard pull, depending on when you're looking to purchase. But we can't close unless it's a hard pull. So
Mm-hmm.
that's one distinction. If you've gone all the way through underwriting, you've had a hard pull done, which is good for at least 4 months. So that's one thing. If you're if you had a soft pull done, there's a chance that you do a hard pull later and some things change, right?
Mm-hmm.
And so
Mm-hmm.
it's a pre-approval. That means, sometimes we've done a soft pull. So that's one distinction. Again, I've looked at all of your income documents. I've looked at your credit. I've evaluated your assets. I've evaluated your file.
Mm-hmm.
And I have put the stamp on you that, I think you're good to go. And if I put the
Mm-hmm.
stamp on you, it's almost like an underwriting approval because I'm very, very thorough. Don't get me
Yeah.
wrong. However, I am not an underwriter. I don't make the final decision.
Yeah.
Underwriters are kind of like the lawyers of
Mm-hmm.
mortgage companies. So they're going through everything with a fine-tooth comb. They're making sure
Mm-hmm.
we've met all the guidelines that
Mm-hmm.
these agency will request, these agencies will request, these investors will request. They're making sure that we're meeting all of these different things, right? And once we've met all these different things, then they're going to go ahead and issue a loan approval. And so once we get that, then we can go ahead and issue the loan commitment letter. And that loan commitment letter is like, hey, this person has gone through underwriting. The underwriter has went through their income documents. They went through the W-2s, the pay stubs, the bank statements. They looked at the credit. They reran the automated underwriting system to
Mm-hmm.
make sure that this person is approved. And then if we can go shopping with a loan commitment letter, we doing it, right? Because
Mm-hmm.
at this
That's
point,
right.
it's not too many more steps left in the process
Right.
before this person is clear to close.
Yep.
Clear to close means that we have every single thing in place that we
Mm-hmm.
need. The appraisal is back in,
Mm-hmm.
we've had the underwriter look at the file
Mm-hmm.
and, everything that we need is in once we have the clear to close. But those are the magical words. There's been plenty of people that have been pre-approved that haven't gotten to that clear to close table. All right.
Exactly.
It's
Yes.
even been people who have been conditionally approved that have not been clear to close.
Mm-hmm.
So those are the magical three words.
All right. Well, listen, Jordan. Okay, so let me before we close out, is there anything else that folks need to know about the processes? Any tips that we didn't cover, for those that are interested in moving up, that you could think of at this time? If not, no worries. Just give them your contact information and we'll check this as, Q1
Yeah.
kickoff, you know. Go
Yeah,
ahead.
no, I would say we pretty much hit on everything that we need to. The biggest thing
Hmm.
I would say is just don't overthink it.
Hmm.
If you have real concerns about your credit, we can do a soft pull. If you have concerns about the income, let's figure it out. You may have enough income. If you have concerns about your assets and not having enough saved, well,
Hmm.
sometimes you don't have to have much of anything saved. I've had people use a multitude of different products that was able to help them with the down payment, with the closing
Hmm.
costs. We might be able to get seller help to help with the closing costs. So
Hmm.
don't think that you have to have 20,000 saved and put 20% down to get into a home as a first time home buyer or repeat buyer, right? So
Right.
you just never know. So the
Okay.
best thing to do is just apply, let's take a look, and then come up with a game plan to help you achieve your goals.
All right. Well, listen, you got me excited to think about. I mean, I'm like, wait, hold on, 5%?
Yeah, yeah,
Wait, so if I look at a cheaper property, wait, so that's all I need?
yeah.
Okay, so we gonna definitely talk. I want to thank you so much for doing this, making
No,
yourself
thank you.
available, sharing not just gems, but real information, real time information is greatly appreciated. I can see most of your information in your background. Okay,
Go check it out.
awesome. Jordan Alston, phone number is 240-216-5931. Email jalston, ALSTON, at bsmfunding.com. And his website where you could just go ahead and apply is www.applywithjordannow.com. And you can follow him on his social medias _Jordan Alston. And Jordan, we got to do this again. We will definitely need to
Absolutely.
follow up throughout the year. I'm guessing we probably should do like a quarter two follow up. Thank you so much. Enjoy the rest of this afternoon. I am going to stop recording and we will count this one done for the day.